Okay, so it's 5:30 here in the UK. This is Live on Friday with Tom Williams, and I'm Rita Offen, and welcome, and hello Peter, who's saying hello. And okay, well, Tom's been looking at the charts, and what we'll do is I'll hand the headset over to him. Here you are, Tom.
Thank you, Rita. Tom Williams here, speaking to you from the UK. Hi, everybody. We've got a 7-minute chart up on the screen. Now, there's no particular reason why this 7-minute. You can look at any of these time frames, and they will all tell you a similar story. Now, I think myself that this whole market is slowly distributing. In other words, they mark it up. It's been sold, shall we say, almost undercover, right? And when they're selling, makes the market look or become weak. They seem to support the market. And there was another bit of good news of some sort. They mark it up again. And that's classical area of distribution. The market is so devious and cunning. As I say, you can't trust anybody in the stock market, and that means you can't trust yourself either, because you cannot help subconsciously absorbing all the inference, all the news, everything that's sort of said around comes to you, and on that your mind can't help it. It would tend to form an opinion, but oddly enough that opinion's always wrong, which is rather interesting phenomenon, to be quite honest, isn't it? But it does seem that way. It has to be that way because the way things work. But to me, the whole thing looks weak. And we'll start looking at it now. But when I say it looks weak, it doesn't mean to say it's going to collapse and fall drastically. At the moment, they're distributing. And they may even have another upthrust or another no demand or something or other, especially because it's Friday. They love to try to fool you Friday, so that all the news comes out over the media over the weekend about all the markets shot up. Look, it's shot up because of this. They'll come up with various stories of why it shot up. I believe they've still been pumping money into the market, but where's all that going? And is that why it's been crawling up on no demand and rolling over? And it's obviously at the top of the trend line. It's oversold, right? And you can see when it goes up, usually goes up on no demand. But it's interesting. Now, this is a 7-minute chart we have here. Now, all these time frames are interesting. That's it. Now, all these time frames are interesting. Markets do not like ultra-high volume and up bars. Now, there's your ultra-high volume or high volume look. It's colored blue because it's saying, yes, I'm up. It's up into fresh high ground. Not only is it up into fresh high ground there, but it's closed in the middle. That has to be weakness. That has to be selling. It cannot possibly be anything else. And the direct result of that is lower prices, look. Now, this is only 7 minutes, so we'll go back, and the same thing happened earlier on, look. Sudden surge in volume, look, shows the US pit opened. America opened. First up bar, very high volume again. Up, down, bar, right. I don't like down bars with the high higher than the higher the previous bar. That always doesn't, it's not only is that not correct as far as bullish markets do not do that. Weak markets do. So it's weakness in there and fairly high volume too. Professional money have seen that. Went up, look at the low volume, no demand. They know the weak thing's weak. So they mark it up. There's the high volume. Markets do not like ultra high volume on up bars. Went up into fresh high ground, closed in the middle, bang. That's it. But they will want to hold the market up. They hold the market up, support it, look. While they sell more or distribute more, next wave up. They will not tell you that. They will never tell you that they're distributing, selling. No way. But that's how they do it. They sell, and then if the market falls too much on their selling, they support the market because they want to move it up again on the next wave up to sell more. And that's why Friday, you've got to be ultra careful Friday. Now, please, if you've got any questions, I've got Rita here, look at the screen. Well, we've got several computers running here, but she'll see the questions. I'd love it if you wrote in questions of anything you don't fully understand. There's been some questions. Gavin said, oh, there's lots of questions coming in. What is absorption volume? So I've done, when I do the newsletter, which we would do Saturday or Sunday, there's an article about absorption volume, which will be attached to the end of the newsletter. So those of you who are not completely understand that, please read that, because we see that very, very often, especially in these bull markets. You must keep in mind that whenever there's a move in the market created by professional money forcing their way in or out with their huge numbers of contracts, right, the people that are losing will be highly disturbed, highly emotional. Human beings are very emotional, especially when money's concerned, or women, especially money. Okay, and so it's the reaction. They know. Don't forget, they know in advance what the reaction will bring, because they know how human beings behave. That's a hallmark of a professional player. I think I put in I did in the newsletter, which we typed out this bit about absorption volume, is that if you're a fire chief, for example, you'd be very poor fire chief if you're unable to explain to your new recruits what the people in a cinema or theater would do if there was a fire or a bomb hoax. They know exactly what they do. It's well documented exactly what happens. And believe me, the same thing happens in the stock market. When they have these shakeouts, when they have these pushing through supply to the left, when they have these end of a rising market, right, they know exactly what the reaction will be. Now you might say, oh no, I wouldn't do that. It wouldn't affect me. It may not. But the thing is, as the herd will behave the same way. And it will affect the market, the response. As you see by this ultra high volume and up bars, whenever you see that, you know that market's coming off. And it's probably an excellent tool for scalping. But they will swing it around again. So you have to watch this at the bottom here. On the lows, look. It's fairly straightforward, look. Whenever you see a down bar, push down to fresh low ground. The volume is not very high. Right. And there's even a signal on it.
Strength coming in.
Strength coming in. That means that market is going to go up. Not necessary in a bull move, but we are supposed really what we're talking about scalping. Scalping is a very enjoyable occupation if you get it right. You can make a few $100s here with little or no effort, and it'll certainly keep you occupied. That's for sure. Now, Rita, do you want to say anything?
Carlos wants you to look at the daily chart. So we'll go over to here. Tom, do you want less bars, or is that? There's 20.
Yes, I have to get ready to put 20 bars up because my eyesight's certainly not very hot, I can assure you that. Now, we noticed this before, but as this market went up to this top trend line, look how the spread starts to narrow. Lack of enthusiastic buying will do that. Also accompanied by probably lowish volume, look. Volume that's not enthusiastically on the upside. In other words, it's not bullish. Right, that's a markup, look. A little surge of volume there, look. Showing a little bit of buying there. They tested. Right, there's too much supply there. And that's up to date to yesterday. But if you believe the charts, you just went long.
Test after shakeout.
Where it tells you to. Right. And follow the trending system, look. Allow for one down bar, up, 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 allow for one down bar. It's interesting. Very interesting. But don't forget, probably one of the weakest links of your trading is you yourself. I'm sorry to say. But that's well known. But these trend lines do seem to work. That's why I've always used them.
Gordon's got an observation. He says, I notice they are talking up the UK economy as at the same time the indexes are at all-time highs. Is that something you've experienced before, Tom? Yes, that's the UK. Yeah. Right. We're just going to go back over to...
What was that, talking up the economy?
Yeah, they're talking up the UK economy at the moment. Right. Let's put this up. BSX for Peter. Oh, Struth. Okay. Is that, I assume that's the correct chart. Tell me if it's not. But so Peter would like you to look at this is Boston Scientific. Tom.
Well, thank you for that. Now, before I get to this, the FTSE, I don't have the data on the FTSE, but if you want any questions at all with the FTSE, the FT 100, you have to ask Philip Friston. He's the expert on that index. He's the expert on the whole thing. And I think I was talking to him a day or two ago. And of course, don't forget that you have to have good news, healthy news coming in. So at the back of that, they can distribute. And they can make new highs when they make new highs, that sucks more sellers in, believe it or not. Again, you need a study of human behavior. But Philip Friston's the boy to talk about the FTSE. Now, is this a stock?
VSX, it's Boston Scientific. What happened there?
Well, that looks horrific. Is that some bad news?
Ask Peter. Peter has put it up. It was on good earnings report, he says.
Amazing, isn't it?
Repeat that into the thing, Tom, so everyone can hear.
Pardon?
Tell everyone that. It was on good earnings report.
We're told this was on good earnings report. Well, that to me, that's terrible, isn't it? That's if it's true. I suppose it is. I mean, talk about Dick Turpin, the highway robber. I mean, they'd be fully aware of that. But I don't follow this particular stock, but that to me obviously looks very, very weak. Strong stocks don't do that. Not that. I would not be interested even looking at that until I saw a principle. I would strongly advise you to learn to recognize the principles or a setup, right? And then you do nothing until you're absolutely certain that you can see a setup. Now, I've been doing stock selections. Rita here has been helping me. And we had a look at the stock selections, and I think every one of them went up, shot up. Now, I'm not blowing my horn or our horn, because that's how the market works. It works on fundamental research, showing the professional traders in the big trading houses that that's a good stock, and it will go up and down with the index. Now, I haven't really got a lot of chart here. Could we put a longer time frame up, you think? Well, that's... No, it needs to be up here somewhere. That's high volume, is it? Ah, yes. Well, there's definitely weakness here. Markets don't like ultra-high volume on up bars. There's something happened there that we're not aware of, but they obviously would be. It's drifted sideways, floated down. They supported the market with the general market, marked it up, and right here they've obviously pulled the plug. That looks like a hell of a sign of weakness. Although you will get a bouncing effect, a certain up move after that. But basically, a strong stock would not do that.
Julius is saying, Tom says he makes stock picks. Where are those available? They're available on the tradingthemarkets.com service, the alert service that Gavin runs, Gavin Holmes. Okay, if you've got any other questions, or if you've got any charts that you would like us to look at, then please type them into the question box. Is there anybody here who's very new to VSA? That would be interesting to know. Please put that into the type yes or something in the question box. Yes. Got a few new, yes, Tom. people very new. Hang on.
Yeah, okay, so we have a few new people. Anyway, my name's Tom Williams to these people. I'm the guy who invented all this and, invented all the way to read the market with these signals like this. And it's based on Wyckoff. This was a guy, a trader who lived over 100, 150 years ago, believe it or not. And he realized that the market moves on supply and demand. Now, when we talk about supply and demand, what we're on about is supply and demand created by the professional players. Gavin calls them smart money. They're not, well, they may be smart. They probably are. But they bulldoze their way through the market by the sheer size of their contracts. That is what we talk about, and that's why you get this ultra-high volume. It's these smart players either selling, covering their positions, going short, or whatever. We don't care. But they can't do things, right, without leaving their footprint, without a telltale sign in the volume. When you look at the volume, what you're looking at is the amount of activity that's taken place on a particular bar. Now, if there's a huge amount of activity on, say, an up bar, right, then you have to ask yourself, what are they doing? And if in hindsight you've seen that every time you get high volume in up bars, the market falls, then you must know that they're selling. The high volume represents selling. And if the spreads are narrow, and also there's such a thing as vulnerability of the market. You see, unless you get an up move, a bull move, the vulnerability is not there for professional players to come in and say, right, well, they're probably already in there, say, now's the time I want to take profits. So all that, but that will all come to you. And so every time a trade takes place, doesn't matter what's going on in the world. I mean, there are literally millions of people trading around the world. Some are buying, some are selling, some are holding, some are sitting on the sidelines. It goes on and on and on. Some are doing options and some are in the cash market and so on, right? But what they can't hide is their activity is seen in the volume. In other words, volume is another name for activity. And because if you like the S&P, for example, right? We know that if you trade the S&P, it's registered on the exchange, and that will show up as volume, activity. And on that activity, what actually happened? And we look at the spread as well, the price spread. That's the spread means between the high and the low, and possibly the close, because that gives us a lot of information. But we've got a host of various educational discs and books and all sorts of things explaining all this. And normally when people look at this information, their eyes are open. They think, my God, of course, because people recognize the truth when they're told it. They may not necessarily see it at first, but as soon as they're told, especially when they see it visually in front of them on the chart, then you think, my God, do you know that's true? And then a whole new world opens up to them. But because the market is very, very cunning, very, very devious, because the market seems to know what you're thinking, and it will do its best to shake you out of a trade, suck you into a poor trade, lull you into this, lull you out of that, and so on. And that's how it seems to work. So you have to tread it's almost like going through a minefield. You have to be very, very careful where you tread. Now what we do now, we've got what we call setups. And a setup is a formation within the chart where you know there has to be buying or selling. The selling, of course, is the obvious one, is after an up move has taken place, you suddenly get narrow spreads, ultra high volume, and very often there's a sign of weakness appears. That's one setup. Now in this chart here, you've got the opposite at the bottom, look. Here. What's that say, Rita?
Strength coming in.
Strength. That's right. But when you get your head around it, and once you learn to read these charts, don't forget a chart is a language speaking to you. It's like Braille. Once you learn to read it, you'll have that skill with you for the rest of your life. And I can assure you, you'll never, ever regret it. Sometimes it comes easy to people, sometimes it doesn't. I mean, Rita sitting here, she only got to know about me and this charting software because her husband, Peter, is a computer expert. And I needed some repairs or something happened. And he came in to fix it. And then, of course, he was very interested in it. And, of course, as soon as Rita heard, she rushed around and she looked at it. Now, that was, what, 4 years ago?
Something like that, I think.
Something like that, yeah. Now, Rita is an expert. And she consistently can make money in the market. But there's a lot of hurdles to overcome. Even when you learn to read the chart and read the setups, you've got to overcome your own problems, which I'm sure you could recognize. Now, please, any more questions?
Mark would like us to look at gold. So if we go over to, I mean, tell me if you want a different chart, but if I go over to the continuous contracts, this is gold, Tom. I'll put up a bigger picture first. There was our old trend lines there.
Well, they are now become invalid, really, haven't they?
Yeah. How many bars?
Well, why did the market fall? What was at the top of the last move up here? There. Is there anything there? There must be.
There's no supply, but then there's this bar, this blue bar here is very high volume.
Well, unfortunately, it's only, end of day. But naturally, if we want to analyze this, the top, we probably need to see a 4-hour, and the information will be up there somewhere telling us that market's weak. So the market fell quite dramatically, right? Now, since then, here, it's fallen, yes. But there's a little bit of support here, as you can see, but it seems to be going up on no demand. Well, it is going up on no demand here. So I would say gold is going nowhere at the moment. Not enough to interest me, it wouldn't be, because it just seems to be going up on no demand. For gold to turn around, you need to see a down move. You need to see a down bar on massive volume on a down bar. Right? Hopefully it's in a fresh low ground. Hopefully it's a narrow spread. Hopefully it closes in the middle. And then hopefully next bar or two will hold. That is more or less what we call stopping volume, or a selling climax. In other words, the only thing that can cause that is serious professional money has stepped in and they're supporting this gold And once they do that, they'll want higher prices, and they will keep pushing till they get it. Professional money, they almost bulldoze their way in, but they're pretty smart people. They have to be to stay in business. And there's also such a thing as vulnerability. See, when the market falls from there to there, at least you are vulnerable, right, to somebody in there saying, oh, I think we could take this up a few notches and make some money, look. But it's not. But you get so many lies and rumors and misleading statements surrounding these things, these instruments, that you can very well be easily misled. Remember, they're not there to help you. And that's for sure. One thing is for certain, you will not find anybody in the exchanges, anybody in the professional market is trying to help you. As a matter of fact, it's the exact opposite. And you might say, well, yes, yeah, that might be true, but why do they tell us when all the news events are coming out? Like there's one today. What time was it, Rita? 1:30 English time. Why are they so keen to let you know when the news is coming out? And you've been led to believe that it's the news that drives the markets. Well, professional money know perfectly well it's not the news that drives the market. They use the news to whipsaw the market to your disadvantage and their advantage or benefit. So don't kid yourself that they're helping you by giving you the news. No way. Okay? So I'd say that's going up on no demand.
Oh, I don't know, but this was okay. Gordon would like you to look at the euro versus the dollar. I'll put more bars up, Tom.
Well, the euro has been marked up recently. Probably because of all the bad news coming out of Europe with all the troubles they're having. And they marked it up on the back of that bad news, look. That's an example of why you don't listen to the news. Now, what's interesting there, look, is there's a principle there that I must have mentioned half a dozen times in the last month or so. Right, you've got a blue, it's nut bar, right? It's a narrow spread, almost closed in the middle, and you've got very high volume. Right, now that, and also that will produce a sign of weakness. What's that say, Rita?
Supply coming in.
Supply coming in, which is obviously true. Now, one of the basic principles here is that whenever you see that, not to mention there's a very wide spread up right in the immediate background, whenever you see a test the next day, test. Now the software automatically tells you that they're testing the market. They're testing because there's obvious supply here. That's one of the very powerful signals to buy comes in. A test immediately following a red arrow, and the red arrow, look, is following this widespread up, look. It's obviously strength here. Right. So that's an example of a principle that you should immediately recognize. that euro at the moment.
Just speaking here.
Yeah, that euro at the moment. There is supply in the background, especially seen by that red arrow. There is supply there. Now they may want to test that, but at the moment it seems to be going up. But the volume is slowly failing, look, on the upside. And that probably is a direct result of this high volume here, up bar, narrow spread, even though it tested next bar. The biggest danger to professional money that's carrying thousands of contracts is if they mark it up, some other professional group may start selling into their buying, because there are no friends in the stock market.
Okay, so Thomas has asked for PHM, Pulse Group, Industrial Goods, Residential Construction. So I'm going to put that into this up here. I'll put the daily chart, if that's what you want. Right. This is the picture, Tom. I'm just showing you the longer term first, and then.
Right, what is it? Stop.
PHM, yeah, Pulse Group, Industrial Goods, Residential Construction. Do you want 20 bars?
20, yeah. It could easily be some accumulation on the low point there. This could easily here be what they call the springboard or shakeout immediately prior to an up move. If these down bars are on low volume, then these red ones, you expect the market to go up, because as the market falls, if it's bullish, there'd be little or no volume, no selling pressure. And apparently there isn't no. So the market turns around and up it goes, but it's gapped up here, look. What time frame is this, Reza? Daily, yes. That gap up on high volume like that is not normally a healthy sign. It's almost, they've marked it up deliberately to encourage people, traders to rush in and buy that. And the high volume probably represents some selling into the enthusiastic buying from outsiders.
Thomas says there's an old top to the left at this level. Let's put it up. So, yeah, there was a top here.
Yeah. Well, the only thing I can say is that seeing you've left it this late, if it's bullish, right, they're going to test. You're going to see a down bar, a red down bar on low volume, hopefully narrow spreads. And if you see that now, then you know they're bullish. However, if you see an up bar now, right, on up bar on narrow spreads, very high volume, then they're bearish. So usually when they gap it up like that, might possibly be absorption volume, but not likely. But it might be. But you need confirmation. You've left it a bit late to get in there. There'll be indications on those low points if you analyze that a lot carefully.
Okay, DT says it's a pleasure to meet you virtually, Tom. He says it's a pleasure to meet you virtually, as it were. Thanks for introducing VSA. I clearly see the value. I'm excited to learn it and use it for my trading. Thank you. Right. Pavel says, Tom, could you please share some scalping using VSA ideas? Well, that's going to require me to look through the charts to find some setups.
Oh, I see. Yeah.
We'll work on that one because it involves doing a little bit of research through the charts to find some setups and some principles, which I might be able to do, but it's difficult during the we must prepare, Tom, actually. I remember saying this last time. We need to prepare for the new people some setups and some principles to show you before the webinar. Otherwise, it's difficult for us to be flicking through the charts looking for things whilst we're talking and everybody else is waiting. Which one did you see? Yeah, well, there's this one. So one setup might be, and you need to learn all of these through looking at all the webinars in the archives, through Tom's book or Gavin's book. The setups and the VSA principles, and you'll recognize them as they come along. So a possible setup here might be, and a lovely one that I like, is when you get this really high volume. Now this is an up bar, this is weakness, very, very high volume on an up bar can be possibly selling, and weakness. Well, Tom's saying yes, it is. But there are exceptions when it's possibly going up through a previous area of resistance. But yes, very high volume on up bars is weakness. And you might see the market go up a little bit more, come down. I mean, there's no result from effort. And then when it comes back up to this level, on low volume less than this volume here, and it might come up, sometimes it can come up in a few bars, it might come up in further, but this is your initial weakness. It's in the background, and then it comes back up to that level on low volume or volume less than that. And on this particular chart we actually have a principle here which is called an upthrust. Then that is confirmation of the weakness that you saw previously in that bar that I showed you. So if you have this software, of course, these boxes are absolutely invaluable. You know, the information here is, we keep saying people read it because it's all there. And Philip Friston wrote these and helped to write them and update them. So all the information is there. And upthrust is a sign of weakness, and it's a confirmation. You only get an upthrust after you've had a sign of weakness in the background, a true upthrust. If you've got strength in the background, i.e. very high volume like this but on a down bar, so it's going to be a red, then you must beware, because that can be strength that's buying. So I have seen these bars that appear to be upthrust after strength. You need to be very cautious. And Tom is saying that it's highly unlikely that this is going to go higher than that, because we have all this weakness here. So that's a setup. You might see that's an upthrust, which is a really good sign of weakness. And you could short on an upthrust if you've got definite weakness in the background. You might get a no demand bar, which is a bar similar to this. It might have a narrow spread, but the volume has to be very low, which is pink usually, up in this area here. So that's a setup to go short. And when you say scalping, that's something that I do. And what I would do first, though, is look at the higher time frame. So I'd be looking at the hourly time frame, the 2-hourly, the 4-hourly, looking to see, because they have, I think where a lot of people go wrong is they fail to look at this and to read the weakness or the strength in the larger time frames, because they have more power. An hourly chart has more power than a 15-minute or a 5-minute. So you want to have a good idea by looking at the larger time frames whether the market is weak or strong. Then it depends on how many points profit you're looking for when you're scalping, because obviously a move that might come in an hourly chart is going to be a lot longer, better than you might get in a 15-minute or a 5. I generally use the hourly, 2-hourly, 4-hourly, and the 20, 15, and 10 myself. But everybody has to develop their own trading plan. So that's kind of an idea, a very simple idea. Do VSA. He's asked, all right, so the shortest time frame personally I use is a 5-minute, but I mean different people use different time frames. Do VSA principles work with tick charts? Is question Tom. Yes, he says. Any more to say on that, Tom?
Well, whatever chart you're looking at, actually tick charts are very, very good if you've got true tick volume. Now, there's a lot of skullduggery goes on in the stock market, as you can imagine. They're not there to help you. They will fool you if possible. I mean, you even look at the commodities, you don't get the true volume to the next day. Well, that shows you there's a lot of nonsense going on, because these days of electronic communications, they know perfectly well what the volume is. Most the minute, the second that market closes. So why wait till the next day? Obviously, there's a reason for that. And the reason is they know the value in giving out the amount of volume. And that why should they do that? Why should they help you? They don't want to help anybody. They want to make money for their own accounts. So don't ever think that they're there helping you. Don't believe anything you hear, see, or read about the market either. I've never ever heard anything of any serious help to a trader. Occasionally they may make an accident and say something which happens to be true. But you'll get your head around it. It just takes a little bit of time. Because, you see, to a normal, honest person, the way the market works is very shady dealing, isn't it? I mean, you believe, because you're a fairly honest person, you believe what you hear. Why shouldn't you? If somebody tells you some yarn about the market, why should you not believe it? You're not used to this being lied to. You're not used to it. And that's why it's so easy to form an opinion or get misled, led. It's all very interesting. But once you get your head around all this, you'll have that with you for the rest of your life. And then your skill as a trader then has to kick in. And you will be head and shoulders above most people.
Okay, is this the correct chart for you, DT? He's asking, what do you think about JCP after massive selling into fresh lows over the last few weeks? So this is the daily chart. JCP. Yes, this is the correct one. Yeah, then.
I mean, you've got massive volume there on that down bar, which don't forget, professional money can make mistakes, right? Now, somebody supported the market there, but it's effort versus result. It's no result, look. It's still falling. There's massive amounts of supply present. These people that moved in there may get fed up and suddenly dump and cause a rapid down move somewhere. But this does not look healthy to me at all. But there has been support there, look. And obviously there's a hell of a lot of supply in the background, look. So I'd be very wary of this stock. But you'll see it. What will happen is it will have a lunge down one day. The volume will be low. The spread will be narrow. And on the back of that, it will recover fairly quickly. So you know there is professional support in there. And then what you're looking for then is a test. They won't take it up unless they test the market. Because the biggest danger to a professional player is that somebody comes along and sells huge amounts into their portfolio or buying. And that's a good way to lose money. They know that. You're oversold. You're vulnerable in the market. It's acting weaker than the index, look, without any question. So all that goes against that.
Right. This is for Bill. Looking at the long-term crude oil chart. It's crude oil, weekly or monthly, please. Yeah. Can you? Right. Shall I put? That's the picture, Tom. Crude oil weekly.
Well, Gav is supposed to be the expert on crude oil. I don't actually follow it too much. But there looks like what I would call distribution cap here. Don't forget they can be quite clever in covering their tracks up. But whenever you see these markets arcing over a bit like a mushroom, whenever you see there's probably might even be some good news coming out all along here, and it falls, could quite easily be distribution there. If you suddenly see an up move now and you get no demand up near this level, that's going to come off. So I would say crude oil at the moment shows little interest to me because I can't see a setup. There are so many other vehicles there that will be showing setups of one sort or another. So why should I push my luck with this one? But to me, that looks a bit weak, to be quite honest. Okay.
Okay, the next one will be our last question because we're getting on for the end time. So it's putting something up for Edmund. If I can. Yeah, I've just got to type it in. WHR. Right. So Edmund says, please look at this WHR. I believe there is a setup earlier in the week. There we go. That's for our new members. Yes. Who's the setup? Tom?
Right. Well, there's a setup really here. Is this a daily chart?
It is, yes.
I mean, there's the so-called stopping volume. When you see these wide spreads down close near the low, and it penetrates into low, fresh ground, it's important that, because we then know that that volume has not come from something happening here at this level. It's closed a little bit off it, so we know professional money must have stepped in there and bought. On the back of that, it goes up 1 bar, 2 bars, 3. We would like to see a test. So we get a down bar. We get another down bar. It's now fallen back into this area. And look how low the volume is at that level compared to that at the same level, look. In other words, if we draw a line through here, look, we can see that line, look. Here, there was massive volume. They must have absorbed that volume, seen by the low volume, look. On the back of that, they probably knew some news was coming out, and they've gapped it up, look, dramatically. And on the back of that, it's gone sideways. I would say they may want to come back and test or accumulate more, but right now that looks bullish. That's interesting. That is a setup there.
Okay, well that's it for this week, for tonight. Tom will be doing his newsletter tomorrow, which should hopefully be up in the VSA club tomorrow as well. And Tom says hello to Grigory because we noticed that you were in the room. Grigory's going to be coming over to see us in November. So, yep, next month. Okay, so we'll see you again next Friday, same time, same place, and have a great week. Bye-bye.
Welcome to GoToWebinar, Web Events Made Easy.